Throughout the year, we reviewed tons of TradingView indicators. Here are the top 30 presented in no particular order. The complete 2025 recap. Enjoy. Order blocks with volume. Created by Clay Waite, this Pine script indicator identifies order blocks through consolidation pattern recognition combined with volume analysis confirmation. The indicator operates by first identifying consolidation phases, where both high and low ranges remain within a threshold percentage of their average range over a look-back period. When consolidation is detected and volume strength exceeds the specified multiplier, the system monitors for breakouts above the previous high, bullish, or below the previous low, bearish. Upon breakout confirmation, it creates rectangular boxes representing order blocks that extend forward until price returns to mitigate them. Volume analysis offers three calculation approaches. Simple averaging uses current and previous bar volume, relative method compares current volume to the simple moving average over the look-back period, and weighted method applies different weights to current and previous volume bars. The volume threshold multiplier determines minimum strength required for order block creation, with higher values filtering for more significant volume surges. The system maintains a maximum number of active blocks to prevent chart clutter. Trading applications include using order blocks as support and resistance zones, entering positions on pullbacks to unmitigated blocks, and targeting mitigation levels for profit taking. The volume confirmation helps distinguish between genuine institutional activity and retail-driven moves, while the consolidation requirement ensures blocks form at meaningful decision points rather than random price extremes. D-shaped breakout signals. Created by Luxy, this Pine script indicator generates D-shaped arc patterns based on swing highs and lows to identify potential breakout opportunities. The system constructs mathematical arcs using quarter circle calculations between significant price pivots, creating distinctive D-shaped formations that highlight areas of price compression and expansion. The indicator identifies swing points using a configurable look-back period, default 50, then constructs D-shaped patterns by drawing arcs between consecutive swing highs to lows or lows to highs. These arcs represent potential support and resistance zones where price action may encounter dynamic barriers. The mathematical construction uses trigonometric functions to create smooth, curved boundaries that adapt to market structure. Breakout signals generate when price penetrates either the upper or lower boundaries of active D patterns. Bullish breakouts occur when price closes above the upper arc boundary, while bearish breakouts trigger when price closes below the lower arc boundary. The system maintains a trailing stop level based on the midpoint of the most recent pattern, providing dynamic support and resistance references. Pattern management includes automatic cleanup functionality that maintains a specified minimum number of visible patterns while removing inactive historical formations. Users can adjust swing detection length, minimum pattern count for display management, D-pattern width as a percentage of swing distance, pattern inclusion options, swing highs, lows, or both, historical pattern display styles, arc, midline, or both, and comprehensive color customization for bullish, bearish, and neutral states. Additional options include connecting swing level visualization and pattern fill coloring. Reversal signals. Created by Luxy, this Pine script indicator implements a sophisticated multi-phase reversal detection system based on momentum and trend exhaustion analysis. The indicator identifies two distinct market phases: momentum phases that track initial trend strength and exhaustion phases that signal when trends are losing steam and potentially reversing. The momentum phase mechanism counts consecutive bars, where price closes below the close from 4 periods ago for bullish momentum or above for bearish momentum. When this count reaches 9, it indicates a completed momentum phase and establishes dynamic support or resistance levels. The trend exhaustion phase activates only after a momentum phase is established, counting up to 13 consecutive qualifying bars that suggest the current trend is weakening. This phase tracks multiple price levels, including highs, lows, and calculated risk zones. The indicator generates 3 types of trade setups: momentum-based signals for ranging markets, exhaustion signals for trending reversals, and qualified setups that combine both phases for higher probability trades. Visual elements include numbered counting displays during phase development, completed phase markers, dynamic support and resistance lines, and risk level indicators. The system provides extensive customization options for display modes, allowing traders to view detailed counting processes or only completed phases. Strategy applications include counter-trend entries when exhaustion phases complete, trend continuation trades when momentum phases establish new levels, and confluence analysis when multiple phases align. The indicator works across all time frames and includes warning systems that alert traders when price moves against established trade setups. Created by LNL Capital, this PineScript indicator combines ATR-based stop lines with multi-time-frame trend analysis designed for intraday traders and scalpers. The system operates through two core components, a 13 EMA trend line and dynamic ATR deviation stop lines that adjust based on previous bar ATRs and price position relative to the moving average. The methodology centers around 5 distinct trend modes, ranging from tight settings for low volatility markets to FOMC mode, designed for high volatility environments. The net mode creates multiple ATR bands simultaneously, forming a layered stop system that accommodates scale-in, scale-out strategies. Each mode adjusts ATR multipliers from 60% to 140% of the 8-period EMA true range, creating progressively wider stop zones. The system performs well during trending market sessions, where directional bias exists. Traders can identify entries when price holds above the stop line during uptrends. The higher timeframe component provides context filtering. When both timeframes align, trade conviction increases. The DMI-based bar coloring helps identify when ADX exceeds 20, confirming trending conditions versus choppy consolidation. Strategic implementation works by matching trend modes to market conditions. The automatic higher timeframe selection pairs chart periods. 1-minute charts get 5-minute HTF context, while 15-minute charts reference 4-hour trends. However, the system generates whipsaws during sideways markets when ADX remains below 20. The multiple stop lines in net mode can create analysis paralysis rather than clarity. Fast-moving news events can cause price to gap through all ATR bands simultaneously, invalidating the stop logic. Created by Zierman, this PineScript indicator transforms intraday charts into hourly session-based trading environments through dynamic open-level tracking, retest identification, and multi-timeframe context integration. The system operates by plotting 1-hour and 4-hour opening prices as either lines or zones, while simultaneously tracking price behavior around these levels to identify reversal and continuation setups. The core methodology centers on hourly session opens as support and resistance levels, with the system automatically drawing these levels at each hour and 4-hour interval. The zone feature creates price bands around opens, using percentage-based deviations, providing flexibility for different volatility environments. The retest mechanism identifies when price returns to these levels after initial rejection, marking potential entry points with triangle markers. Volume filtering ensures only retests with above-average participation are highlighted, reducing noise in choppy conditions. The system performs well during active trading sessions, where institutional activity creates respect for hourly opens. The retest functionality captures support resistance dynamics, as algorithmic traders and institutions often defend or challenge these levels. The higher timeframe candle display provides context for trend direction, while the hourly average line helps identify whether current price is above or below the session mean. The percentage change table offers performance metrics across multiple time frames, enabling assessment of momentum alignment. Strategic implementation works best on 1 to 5 minute time frames, where the hourly structure provides meaningful support resistance context. Traders can use zone width adjustments to accommodate different asset volatilities. The retest counter prevents overtrading by limiting signals per session, while volume filtering adds confluence for entry timing. However, the system becomes unreliable during low-volume periods, when hourly opens lack institutional significance. Weekend cryptocurrency markets or holiday sessions often produce false signals as participation drops. The multiple visual elements can create information overload for newer traders. Pure price action structures. Created by Luxy, This Pine Script indicator implements ICT Inner Circle Trader market structure methodology across multiple timeframes, identifying swing points and market structure breaks through hierarchical price action analysis. The tool operates on 3 distinct time horizons: short-term, intermediate-term, and long-term structures, creating nested pattern recognition systems. The indicator uses fractal-based swing detection, where short-term patterns form the foundation for intermediate structures, which in turn create long-term formations. Each level requires specific confirmation sequences: 3-bar patterns for short-term swings, validated short-term swings for intermediate structures, and confirmed intermediate swings for long-term identification. Market structure analysis focuses on break of structure (BOS) and market structure shift (MSS) identification. BOS occurs when price breaks previous swing levels in trending directions, while MSS represents trend reversals through opposite swing level violations. The nested approach ensures higher timeframe structures carry more significance than lower ones, with long-term breaks often indicating major trend changes. Traders can customize display options for each time frame independently, selecting symbol types, label visibility, line styles, and color schemes according to analytical preferences. Professional applications involve using structure confluence, where multiple time frames align to confirm directional bias. The indicator helps identify optimal entry zones when short-term structure breaks align with intermediate or long-term support areas, creating high-probability trading setups based on institutional order flow concepts. In real trading environments, the multi-time frame approach provides context for position sizing and risk management decisions. Long-term structure breaks might warrant larger positions, while short-term signals offer tactical entry refinements within broader directional themes established by higher time frame analysis. Balanced price range. Created by Flux Charts, this sophisticated Pine script identifies fair value gaps, FVGs, and transforms them into balanced price ranges, BPRs. The detection mechanism identifies gaps where the middle candle's body exceeds 30% of the combined body sizes of adjacent candles, ensuring substantial imbalances rather than minor inefficiencies. The system offers 3 detection modes: same directional bars, mixed directional bars, or unrestricted detection. When a bullish FVG gets invalidated by price moving below its lower boundary, it transforms into a bearish inverse FVG, IFVG. The critical innovation occurs when an opposing directional FVG intersects with an existing IFVG, both spatially and temporally, creating a BPR that represents conflicting institutional interest levels. The system tracks retest events with triangular markers when price returns to test BPR boundaries after initial formation. Invalidation methods distinguish between wick-based and close-based violations, allowing traders to choose stricter or more lenient invalidation criteria depending on their trading approach. The sensitivity parameter adjusts gap size requirements with higher values, filtering for larger, more significant imbalances. BPRs serve as high-probability reversal zones, where conflicting institutional flows create natural support and resistance levels. These areas often generate significant price reactions due to the underlying order flow dynamics represented by the intersecting gaps. The indicator includes comprehensive alert systems for both BPR formation and subsequent retests, enabling automated trading system integration. Range analysis. Created by Leviathan Capital, this comprehensive Pine script indicator provides multidimensional analysis of user-defined time ranges through advanced volume profiling, statistical levels, and heat map visualization. It transforms any selected time period into a detailed analytical framework for understanding market behavior within specific ranges. The core functionality centers around volume profile calculation that distributes trading activity across price levels within the selected range. The profile resolution can be adjusted up to 500 levels, creating granular analysis of where most trading occurred during the specified period. Range levels include traditional divisions, halves, quarters, eighths, Fibonacci retracements, and outer extensions beyond the primary range. The directional setting allows traders to interpret levels from either bullish or bearish perspectives, making it adaptable to different market contexts. Value area calculations identify where the majority of volume occurred, typically set at 70%, but customizable to any percentage. The visualization system incorporates both vertical and horizontal heat maps that color code volume intensity across price levels. Volume profile nodes can display as combined up/down volume, total volume, or delta net buying selling pressure. The positioning and sizing of profiles are fully customizable, allowing traders to place them on either side of the range with adjustable scaling. Advanced features include point of control, POC identification, marking the price level with highest volume, value area high and low boundaries, and anchored VWAP calculation from the range start. The indicator supports both intraday and higher time frame analysis, with automatic data aggregation from lower time frames when needed. This tool excels in identifying institutional levels where significant trading occurred, making it valuable for swing traders, analyzing consolidation periods, or day traders working within established ranges. The combination of volume analysis with traditional support/resistance creates a comprehensive view of market structure that goes beyond simple price action. The extensive customization options include multiple line styles, colors, text positioning, and display preferences. Auto Fib Retracement Alerts. Created by DevLucem, this Pine script automatically identifies significant swing points and draws Fibonacci retracement levels between them, triggering alerts when price reaches a specified retracement target. The pivot detection system scans for local extremes using a configurable depth parameter, identifying highs and lows that stand as the strongest point within their surrounding candles. Once found, it calculates percentage deviation from the previous pivot. Only movements exceeding the threshold, default 5%, qualify as significant swings worthy of Fibonacci analysis. When a valid swing forms, the indicator plots up to 13 Fibonacci levels between swing points, spanning from 0% to 423.6% extensions. Each level displays as a horizontal line with accompanying labels, showing both Fibonacci ratio and actual price value. The alert mechanism monitors a user-selected retracement level, default 61.8%, and fires signals when price crosses this target following new swing formation. Buy alerts trigger when price retraces down to the level during upswings, while sell alerts activate on retracements up during downswings. The logic ensures only the first touch after swing confirmation generates alerts. The reverse option allows inverting Fibonacci direction for different analysis perspectives, or measuring from recent price action backward to previous extremes. Line extension controls determine whether levels project into future bars, past bars, or both directions. Users can toggle individual Fibonacci levels, customize the deviation threshold to capture more or fewer swings, adjust depth for sensitivity to short-term versus longer-term pivots, and modify which retracement level triggers alerts. Display options include showing prices, ratios, or both on labels. Volume Spike Retracement. Created by Rick Simpson, this Pine script indicator identifies abnormal volume events and plots retracement levels from the extreme prices reached during those spikes, operating on the premise that volume-driven moves establish key levels where price returns for continuation or reversal setups. The volume spike detection compares current volume against its highest reading over a look-back period, default 89 bars, using relative strength calculation. It processes volume through exponential smoothing to reduce noise, then measures deviations from this baseline. When deviation exceeds a multiplier threshold of recent maximum deviation, the system flags a volume spike and captures the candlestick's extreme price, the high for bearish spikes or low for bullish ones. The retracement framework treats these volume-marked prices as significant decision zones. Bearish spikes draw lines at the candle high, representing overhead resistance where sellers overwhelmed buyers. Bullish spikes generate support lines at lows where buyers stepped in aggressively. The indicator maintains up to a configurable number of historical lines, default 10, automatically removing the oldest when new spikes occur. Labels display exact price values and bar count since formation, quantifying how long each level has remained untested. Line management tracks whether price has crossed each level. Once breached, labels disappear and the line either extends forward, if enabled, or stops updating, visually communicating which zones remain active versus invalidated. Alert functionality triggers on initial volume spike detection at the specified threshold and when price crosses active retracement lines for the first time, allowing traders to monitor spike formations and catch retest opportunities without constant chart watching. Users can adjust volume look-back period and multiplier sensitivity to capture more or fewer spikes, select between single line or zone visualization, modify line appearance through style and size options, control maximum displayed levels, and toggle historical price or volume strength labels. Created by Trendline Project, TPRSI 2.0 is a refined take on the classic relative strength index. It combines RSI logic with multi-layered moving averages, Bollinger Bands, and divergence detection, forming a comprehensive momentum and confirmation system. The indicator's foundation remains the RSI, but its functionality goes beyond simple overbought or oversold readings. It smooths the RSI line with adaptive moving averages, allowing traders to spot trend phases and exhaustion zones more clearly. The multi-ribbon system builds a visual RSI landscape, where gradients change with momentum direction. This layered effect turns the RSI into a trend tracking tool rather than a static oscillator. Built-in divergence detection automatically flags both regular and hidden divergences between price and RSI, giving traders early signs of potential reversals. These signals, combined with customizable look-back ranges, make it practical across various assets and time frames. The Bollinger Band overlay helps gauge RSI volatility, while alert conditions simplify automation for those relying on notifications rather than visual cues. In a real trading setup, TPRSI 2.0 shines as a confluence tool. It's especially useful when confirming trend reversals or timing pullbacks within larger structures. Swing and intraday traders can pair it with price action or volume indicators to validate entries and exits. Its customizability, from MA types to color styles and signal alerts, allows users to tune it precisely to their strategies. It offers several practical applications that align naturally with different trading styles and phases of market behavior. One of the clearest ways to use TPRSI 2.0 is during breakout setups. When the RSI ribbon and its Bollinger Bands begin to contract, it signals compression, a buildup of momentum waiting to release. A strong RSI surge breaking out of the upper or lower Bollinger Band, especially on rising volume, confirms the move's strength. Traders can enter at the breakout itself, or, for a more conservative approach, wait for a pullback where RSI retests and rejects the ribbon. When both the ribbon and RSI color gradients align in the breakout direction, it often marks the start of a sustained move rather than a short-lived spike. Following a confirmed breakout, TPRSI 2.0 helps identify optimal re-entry zones during pullbacks. As price trends, RSI typically oscillates between overbought or oversold zones without resetting completely. The ribbon acts as dynamic support or resistance for RSI. When price pulls back and RSI approaches this ribbon from above, in an uptrend, or below, in a downtrend, traders can watch for rejection and re-acceleration. This is a logical continuation of the breakout phase, offering multiple lower-risk entry points within an ongoing trend. The built-in divergence detection enhances both strategies above. Regular divergences warn of potential exhaustion at trend extremes, helping traders secure profits or avoid false breakouts. Hidden divergences, on the other hand, confirm trend continuation during pullbacks, providing extra confidence when RSI and price align with the broader directional bias. Combining TPRSI 2.0 with structural tools such as support and resistance zones or trend lines adds further precision. A breakout occurring near a well-defined resistance line with RSI expansion strengthens conviction, while a pullback aligning with a trendline retest and RSI ribbon bounce offers a clean technical confluence. This integration anchors the indicator's signals within broader price structure, improving timing and reducing noise. Overall, these use cases show how TP/RSI 2.0 transitions seamlessly between momentum discovery and trend management, a rare blend that suits both breakout and continuation traders. Created by LuxAlgo, this indicator analyzes volume patterns to identify areas where institutional activity and significant trading interest concentrate. It tracks 4 distinct concepts: ranges of interest, impulses, levels of interest, and volume divergences, each revealing different aspects of volume-price relationships. Ranges of interest identify periods with the highest volume within a look-back window, default 50 bars, marking the high and low boundaries of these zones, plus an average midpoint. These ranges highlight where the most aggressive buying or selling occurred, often indicating accumulation or distribution phases. The indicator updates these zones dynamically as new volume peaks appear, showing traders where market participants demonstrated strongest conviction. Impulses detect simultaneous volume expansion and directional price movement. A bullish impulse requires both volume and price highs to exceed their previous look-back period highs, default 20 bars, while bearish impulses need volume highs paired with price lows breaking below previous lows. These candles receive colored borders, green for bullish, red for bearish, marking explosive moves backed by participation rather than low liquidity spikes. Levels of interest plot horizontal lines at price levels where volume pivot highs occurred, maintaining up to 5 recent levels, configurable. These lines use gradient coloring based on their relative price position, with colors transitioning from blue low to red high. They represent price areas where previous volume spikes suggest potential support or resistance as market memory. Volume divergences compare volume pivot highs against price pivot highs and lows. When volume makes a lower high while price makes a higher high, the indicator draws a bullish divergence line, suggesting weakening upward momentum. Conversely, when volume decreases while price makes lower lows, it draws bearish divergence lines, indicating potential exhaustion of selling pressure. These patterns reveal when price movements lack volume confirmation. The toolkit offers independent toggles for each component with customizable lengths and colors. Users can adjust how many levels of interest display, modify look-back periods for different time frames, and control visual elements separately. The ranges update only when new volume peaks occur, preventing clutter while maintaining relevant context. Kalman trend levels. Created by Big Beluga, this Pine script indicator applies Kalman filtering to price data using dual time frame analysis, implementing an adaptive state estimation algorithm that recursively processes noisy price measurements to extract underlying trend direction. The indicator combines signal processing theory with traditional crossover logic, generating trend signals and dynamic support resistance zones. The Kalman filter function operates through a prediction update cycle, initializing with estimate and error variables that evolve across each bar. The algorithm predicts the next state, calculates Kalman gain based on error estimates, then updates the estimate by correcting the prediction using actual price data. Process noise and measurement noise parameters scale inversely with the length parameter, allowing shorter periods to respond faster, while longer periods remain stable. The implementation runs on 2 different lengths, a default 50-period short filter and 150-period long filter. Trend determination follows dual filter comparison, where bullish conditions occur when the short Kalman exceeds the long Kalman, similar to moving average crossovers, but with noise reduction properties of optimal state estimation. The indicator tracks both the crossover relationship and the short filter's momentum by comparing current values against 2 bars prior. The visualization employs dynamic boxes that form at trend transitions and extend horizontally until the next reversal. Bullish shifts create boxes below price, positioned between the low and low plus half the 200-period ATR. Bearish transitions create boxes above price, from the high down to high minus the same ATR offset. These boxes represent zones where prior trend extremes occurred, functioning as potential support or resistance during pullbacks. Labels mark each trend change with directional arrows and rounded price values. Optional retest signals activate when price touches box boundaries from the opposite side, marking these events with X symbols for bearish retests and plus symbols for bullish retests. The fill between short and long Kalman lines creates a cloud that expands during divergence and contracts during convergence. Traders can use Kalman crossover points as primary trend signals, while monitoring boxes for retest opportunities, offering lower risk entries. The adaptive filtering smooths price action more effectively than simple moving averages during volatile periods, though with inherent lag. Customization includes adjustable length parameters for both filters, toggles for retest signals and candle coloring, plus color selection for bullish and bearish states. Bjorgum SuperScript. Created by Bjorgum, this Pine script consolidates multiple technical analysis systems into a single interface with 4 selectable strategy modes: BJ reversal, MA crossovers, TRM, and RSI color coding. It combines Tilson T3 moving averages, EMA, TSI, RSI, and parabolic SAR into a unified framework with extensive customization and alert capabilities. The BJ reversal strategy uses dual T3 moving averages to identify trend continuation and reversal patterns. Price positions relative to these smoothed lines generate 4 distinct candle color states: bullish trend in blue, bearish trend in red, and 2 reversal conditions in yellow when price crosses against the primary trend. The T3 algorithm applies triple exponential smoothing with adjustable alpha parameters, creating lag-reduced moving averages that respond faster than traditional EMAs while filtering noise. The MA strategy employs 3 configurable moving averages with 11 type options, such as EMA, T3, or WMA. Each average can use different calculation methods and periods, with the system coloring bars, based on price position, relative to all 3 averages simultaneously. This creates a consensus-based approach where bars only show bullish signals when price exceeds all configured averages. The TRM strategy combines TSI crossovers with RSI threshold filtering to generate buy and sell signals. It requires both indicators to align in the same direction. TSI must cross above its signal line, while RSI stays above 50 for buys, with inverse conditions for sells. This dual confirmation approach attempts to reduce false signals that occur when momentum indicators conflict. The RSI color mode assigns 20 distinct color gradients based on RSI values in 5-point increments from 0 to 100. This creates a visual heat map directly on price bars, allowing traders to identify momentum extremes and divergences without referencing separate indicator panels. The Bjorgum buy rating table aggregates signals from all 9 components: TRM, reversal, TSI curl, RSI, 3MAS, and SAR, into a scored summary. Each component receives +1 for bullish, -1 for bearish, or 0 for neutral. Real-world application benefits from the modular design that lets traders test different technical approaches without switching indicators. The comprehensive alert system supports 16 distinct conditions with both traditional alert condition and dynamic alert functions, enabling granular notification control. However, the complexity creates a steep learning curve, and the lack of backtesting statistics makes it difficult to determine which strategy mode performs best. Customization reaches exceptional depth with over 100 input parameters controlling colors, periods, alert toggles, display options, and calculation methods. Island reversal. Created by Luxy, this indicator identifies island reversal patterns where price gaps create isolated trading ranges separated from surrounding price action, filtering potential reversals through trend alignment, volume surge, and range characteristics. The pattern detection mechanism monitors for price gaps where current low exceeds previous high, bullish gap, or current high falls below previous low, bearish gap. When an initial gap forms, the system tracks island formation by recording subsequent bars until a second gap appears in the opposite direction, isolating the middle section. The island remains valid only if price stays above the initial gap level for bullish patterns or below for bearish ones. Trend filtering ensures patterns align with prior market direction by comparing highest highs and lowest lows over a user-defined period. Volume confirmation compares average volume during island formation against the equivalent preceding period, requiring increased participation. The horizontality filter applies R-squared statistical analysis to closing prices within the island, measuring how closely price resembles a flat horizontal line. Lower R-squared values indicate sideways consolidation, while higher values reveal trending behavior. Islands qualify only when R-squared falls below the threshold, ensuring genuine consolidation. Volatility filtering uses ATR-based range comparison, qualifying islands only when total height stays below the threshold. Luxy Big, Beautiful Dynamic ORB. Created by Luxy, this comprehensive opening range breakout indicator builds multi-stage ranges across the first 5, 15, 30, and 60 minutes of trading sessions, detecting breakouts with advanced filtering and complete position sizing calculations. The methodology tracks 4 independent ORB periods simultaneously, allowing each to complete at its designated time frame. It integrates multiple confirmation layers, including volume analysis comparing current activity against moving averages, trend filters using VWAP, EMA, Supertrend or combinations, fair value gap detection for momentum confirmation, and higher timeframe bias checking to validate intraday moves against daily or weekly trends. When price closes beyond an ORB boundary with configurable buffer percentage, the system registers a breakout and tracks subsequent retest cycles, where price returns to test the original range. The position sizing engine calculates share quantity based on account risk parameters, offering both fixed dollar and percentage-based risk modes with maximum position limits. Stop-loss placement adapts through 7 methods, including Smart Adaptive Mode that adjusts multipliers based on volatility conditions, percentage-based distances, ORB range fractions, swing points, and ATR-based systems. The dashboard presents live trade metrics, including entry price, stop-loss distances, position size in multiple currencies with live exchange rates, risk-reward ratios, volatility assessment, and session statistics tracking wins, losses, and win rate. I've put together a free trend following indicator I'm sharing with you today. It's called Quantum Ribbon Lite, a 5-layer ribbon system that identifies trend opportunities with automatic stop-loss and take profit levels built in. Let me explain how it works. The core uses 10 exponential moving averages arranged in 5 pairs, creating gradient-colored clouds spanning from 21 to 60 periods. When all layers align, that confirms trend strength and direction. Blue-teal ribbons mean bullish alignment, the market's trending up. Red-pink ribbons mean bearish alignment, trending down. When the colors are mixed, the market's in a neutral or transitional state. This visual clarity makes trend assessment immediate without analyzing multiple indicators. The reason for multiple layers instead of just crossing 1 or 2 moving averages is noise reduction. All 5 pairs need to agree before a signal appears, creating a higher bar for entry that filters out whipsaw conditions where single moving averages tend to fail. Beyond ribbon alignment, the system requires multiple confirmations. Strong directional momentum must exceed half an ATR. This ensures price is actually moving, not just drifting. Volume needs to be above average to confirm participation in the move. A hidden confidence threshold automatically screens out weak setups that meet technical criteria but lack conviction. This multi-layered approach reduces false signals in choppy or ranging markets. You'll still get some whipsaws when conditions shift, but they're minimized compared to simpler systems. Every signal includes complete risk management. Stop losses use ATR and adapt to current market volatility. When things are calm, stops are tighter. When volatility picks up, they widen to give trades room to breathe without getting stopped out by normal price movement. Take profit targets calculate as multiples of risk. Using the default 2-to-1 setting with a 50-point stop puts the target at 100 points. This maintains consistent risk-reward ratios across every trade regardless of market or volatility conditions. The math is simple. With 2-to-1 targets, only 34% winners are needed to break even, and testing showed around 50% on some instruments on daily timeframes. 3 dotted lines display when there's an active position: white for entry, red for stop, green for target. These extend forward from the entry bar, making position management straightforward without needing to calculate levels. The indicator blocks new signals while a position is open. This hold to completion mode prevents common mistakes like getting distracted by new setups and abandoning good trades before they have a chance to work, or overtrading by stacking multiple positions simultaneously. Enter, manage that one position, and wait until it closes. Either the stop gets hit or the target gets hit, then evaluate the next signal. Adjustable settings keep configuration simple without sacrificing control. Signal sensitivity runs from 1 to 10, controlling signal frequency through a cooldown period. Lower numbers, 1 to 3, mean more signals with shorter waiting periods between entries, suitable for active traders who want frequent opportunities. Higher numbers, 8 to 10, apply longer cooldowns, filtering harder for higher quality setups and reducing trade frequency. Start at 5 for balanced performance and adjust based on preferred trading pace. Stop-loss distance offers 3 options: tight, normal, or wide. These multiply ATR differently to accommodate various trading styles. Tight uses 1.5 times ATR for smaller risk. Normal uses 2 times ATR as the balanced default. Wide uses 2.5 times ATR for multi-day swing positions that need more breathing room. Take Profit Target provides 1 to 1.5, 1 to 2, or 1 to 3 risk-reward ratios. The 1 to 2 default offers the best balance, profitable at 34% plus win rates while remaining achievable in most trending conditions. 2 toggles control the stats table, and risk lines display for those who prefer cleaner charts or manage positions externally. The performance tracker in the top right updates in real time, displaying win-loss records and success rates with color-coded visualization. The statistics update as each trade closes at stop or target, providing ongoing performance data that guides adjustments to sensitivity or risk settings. Ribbon spacing provides visual feedback about trend strength and reliability. Expanding ribbons with clear separation between layers signal strengthening trends, ideal conditions for new positions. Squeezing or contracting ribbons suggest losing momentum or consolidation approaching. Signals during compression periods carry higher risk of failure as trends weaken. Price chopping through the ribbon center indicates ranging conditions. While the indicator blocks signals when ribbon colors are mixed, it can still fire when the ribbon aligns, but price remains in a tight range. In those cases, waiting for a clear breakout improves reliability. Testing across daily timeframes on different markets, Bitcoin, futures, major stocks, showed win rates around 50% using 2-to-1 targets. That's solid for trend-following systems, producing positive expectancy with comfortable margin above break-even requirements. Lower timeframes generate more signals, but with reduced reliability, as expected. 4-hour charts might produce 40 to 45% win rates, while hourly or lower charts often drop below 40%. The indicator works across all markets including stocks, forex, crypto, and futures, though performance varies based on each instrument's trending characteristics. Assets that trend cleanly perform better than those that chop sideways frequently. Wait for clear breakouts from ranging conditions before taking signals. When price chops through the ribbon center, skip entries until it breaks out. This improves results, but requires judging when the market is ranging versus trending. Combine with your existing strategy, support resistance levels, chart patterns, or other technical methods. Only take those setups when the ribbon confirms the direction. The automated risk management handles stops and targets for you. Combine with the TP-RSI tool for additional filtering. Take long signals only when RSI shows bullish conditions and shorts when RSI is bearish. This double confirmation reduces false entries during weak trends. More about that in upcoming videos. Keep the indicator on daily charts to identify the primary trend, then take trades on 4-hour or hourly time frames only in that direction. This filters shorter-term noise against the longer-term trend. Fibonacci projection with volume and delta profile. Created by Zierman, this PineScript indicator combines traditional Fibonacci retracement analysis with volume profiling and forward price projection. It detects swing highs and lows over a configurable period, then draws standard Fibonacci levels between these points, while simultaneously projecting potential future price targets based on the selected ratio. The swing detection uses a straightforward highest-lowest approach over the defined period, drawing horizontal lines at the most recent swing extremes. Between these points, the indicator plots the familiar retracement levels: 23.6%, 38.2%, 50%, 61.8%, 78.6%, with color-coded lines. What sets this apart is the projection component. It extends beyond current price action to show where price might travel if it continues following Fibonacci relationships, displaying percentage moves along each projected segment with a final 1.272 extension target. The volume profile feature adds contextual depth by analyzing the price range between swing points. It divides this range into customizable rows and aggregates bullish versus bearish volume within each bin, displaying the distribution as colored boxes. This reveals where actual trading activity concentrated during the swing, potentially highlighting levels with stronger participation that may act as support or resistance on revisits. The delta profile takes this further by calculating the net difference between buying and selling volume across Fibonacci-defined price bands. Positive delta zones appear in one color, negative in another, giving traders a quick read on which price areas saw dominant buying or selling pressure. This can inform decisions about which levels might hold versus those that were established primarily through one-sided activity. Customization options are extensive. Nearly every visual element has adjustable colors, sizes, and styles. The projection boxes, lines, labels, and volume displays can all be tailored to personal preferences. EMA Market Structure. Created by Boss Waves, this PineScript indicator merges exponential moving average trend filtering with swing-based market structure analysis, providing break-of-structure signals alongside suggested stop-loss placement. The EMA component goes beyond a standard moving average by implementing a gradient color system based on acceleration. Rather than simply coloring the EMA by direction, the indicator calculates the rate of change in the EMA's movement. The result is an EMA that shifts through a color spectrum reflecting momentum intensity, not just direction. An optional glow effect created through multiple plot layers and fills gives the EMA visual prominence on the chart. Swing detection uses standard pivot logic with configurable look-back periods. The indicator tracks consecutive swing highs and lows, drawing connecting lines and optional shaded zones between them. These zones represent potential support and resistance areas where price previously reversed. The break-of-structure system triggers when price closes beyond a previous swing point, while the EMA confirms trend direction. A bullish BOS requires price breaking above the prior swing high with the EMA rising. Bearish BOS needs price below the prior swing low with EMA falling. This dual confirmation filters out structure breaks that occur against the prevailing trend. Each BOS signal automatically plots a stop-loss level at the triggering candle's wick extreme, plus a configurable buffer percentage. The SL extends forward as a dashed line with an accompanying zone box, providing clear risk reference for trade management. Volume Sentiment Breakout Channels. Created by Algo Alpha, this indicator constructs price channels based on volatility pattern detection, analyzing volume distribution within each channel to reveal buying and selling pressure through gradient-colored sentiment profiles. The channel formation methodology uses normalized price calculations by scaling close values between highest high and lowest low over a user-defined period, then applies standard deviation analysis. When volatility patterns cross specific thresholds after sustained periods, the system captures the price range with ATR-based buffer zones. Volume sentiment analysis divides each channel into granular horizontal bins, default 20 levels, calculating volume traded within each price level. For every bin, the system tracks both total volume and directional bias by weighting volume positively for bullish candles and negatively for bearish ones. This renders as a gradient histogram extending leftward from the channel's start, with colors intensifying based on volume concentration, displaying current sentiment percentages for the price level, where the asset trades, showing both localized sentiment and overall channel bias. Upon breakout beyond channel boundaries, with optional strong close filtering, the channel disappears, and the system initiates dynamic trend tracking using moving averages, plotting support lines for bullish breaks, and resistance for bearish ones. Created by Luxy, Trend Volume Accumulations Indicator identifies areas of interest based on the relationship between price movement and volume clustering. It scans recent candles using a configurable look-back period, measuring how price and volume interact to highlight zones where accumulation or distribution may be forming. These zones appear as shaded horizontal areas on the chart. The tool maps price levels that historically attracted significant volume during trending conditions. It applies a smoothed interpretation of price data over the selected length to generate cleaner zones, reducing false signals caused by short-term volatility. When price revisits these zones, traders can anticipate potential reactions, either continuation or rejection, based on past activity. The zones are adaptable across multiple timeframes, making them useful for both swing and intraday traders seeking entries aligned with accumulation logic. For example, a price returning to a previous accumulation zone during an uptrend may indicate a bounce opportunity, while repeated touches without follow-through could suggest weakening demand. This indicator doesn't generate direct buy-sell signals. Instead, it complements other strategies, particularly those based on volume profiles, support resistance, or trend continuation. Auto Trendline Indicator based on fractals. Created by Doji Emoji, this Pine script indicator automatically generates trend lines by connecting recent fractal points identified through pivot high and low analysis. Fractals are detected using configurable period settings, and lines are drawn between consecutive points of the same type. Using a default 10-period lookback, the indicator categorizes pivot points as higher highs, higher lows, or lower lows. When new fractals form, they are linked to prior ones to create upward or downward trend lines that extend into future price action. Recent lines appear in full opacity purple, while older ones fade to gray. Users can customize the number of visible line pairs, extension direction, right or both, and fractal display options. Cross-detection monitors when closing prices breach trendline levels. The indicator calculates real-time trendline values using linear equations based on fractal coordinates and triggers alerts upon violations, signaling potential breakouts. This tool supports strategies such as trend continuation, when price respects trend lines, breakout entries on cross events, and confluence analysis where trend lines converge. Its automation removes subjectivity while ensuring precise and consistent trendline placement. Created by Rafael Zioni, this indicator combines volume price trend VPT analysis with a modified Supertrend calculation to generate trading signals. The indicator enhances traditional trend following by incorporating volume price relationships into its calculations. The indicator calculates a specialized volume price metric by tracking the relationship between price spreads, high-low ranges, and volume, creating a cumulative measurement that forms the foundation for its signal generation. This approach adds depth beyond standard price action analysis by incorporating trading intensity into trend identification. Signal generation occurs through dual mechanisms: primary signals when price crosses the supertrend line, and secondary TP, take profit, signals based on statistical deviations from a linear regression slope. The visualization includes color-coded trend lines, with green indicating bullish trends and red showing bearish conditions, complemented by explicit buy and sell labels at signal points. Trading strategies with this indicator might include trend-following setups where entries occur on supertrend line crossovers, with confirmatory volume presence. The take-profit mechanism offers natural exit points based on statistical deviations, creating a complete trading system. Conservative traders might wait for alignment between the supertrend direction and the EMA crossovers, blue and red lines, before entering positions. The Multi-Timeframe Trend Indicator by Oxkali is a simple but practical trend tool designed to show whether price action is bullish or bearish across multiple timeframes. It compares a short-term and long-term moving average, defaulted to 50 and 200 periods, and displays the trend direction for each timeframe in a compact table on the chart. Users can choose the moving average type, SMA, EMA, WMA, or AMA, and customize which timeframes are shown. The indicator also calculates an average trend score, which is color-coded and summarized, and can optionally color the candles according to the overall trend. Created by Gu5Tavo71, this PineScript indicator combines three technical analysis frameworks into a comprehensive trading system: EMA crossovers, trend channels, and the classic golden cross. The indicator identifies market direction by analyzing the relationship between faster EMAs, default 26 and 50 periods, alongside a longer-term moving average, default 200, that establishes the primary trend channel. The system creates a dynamic trend channel based on ATR-derived boundaries around the main moving average, allowing traders to visualize price action relative to the underlying trend. When price operates within this channel, the market is considered ranging, while movements outside signal potential trending conditions. The indicator then synthesizes this information with EMA cross signals to generate actionable trading opportunities, offering two strategic approaches: entering trades on direct price EMA crossovers, or restricting entries to periods when the shorter EMA demonstrates upward momentum. The system incorporates customizable stop-loss functionality based on percentage risk and provides clear trade signals through icon markers on the chart. Period restrictions allow traders to limit trading activity to specific time windows, ideal for session-based strategies. The indicator excels at trend filtering by requiring alignment between multiple timeframes and technical elements before generating signals. Traders can also enable golden cross detection between the medium-term EMA and long-term MA for additional confirmation of major trend shifts. Created by Lazy Bear and based on the work of John Ehlers, the Ehlers Instantaneous Trend Indicator uses digital signal processing to highlight trend direction and potential reversals with minimal lag. It applies a recursive filter formula to generate a smoothed trend line and a trigger line, offering a faster and more responsive view of market shifts compared to traditional moving averages. The indicator's core logic relies on the interaction between these two lines. When the trend line rises above the trigger, it signals bullish momentum. When it drops below, it suggests bearish pressure. Optional visual features like bar coloring and trend region fills add clarity, but can be disabled for a cleaner chart. Use cases primarily include trend confirmation and early reversal detection. Swing traders may find it smoother than fast EMAs, while scalpers can use it for quick trend shifts on lower time frames. A simple strategy might involve entering long when the trend line crosses above the trigger and exiting or reversing when the opposite occurs. Adding volume or volatility filters helps minimize false signals in choppy conditions. The Trend Trader Karan indicator, by TradingScan or TTK for short, is a modified version of the half-trend indicator that identifies trend direction and potential reversal points on price charts. It distinguishes itself by allowing traders to analyze two different trend periods simultaneously, main trend and current trend, with the ability to adjust the main trend to different time frames for multi-timeframe analysis. This indicator calculates trend direction using price swings and moving averages, plotting a trend line that changes color based on the detected direction. When the trend shifts, the indicator generates potential entry signals with arrow markers. The dual-period functionality helps traders distinguish between short-term fluctuations and the broader market direction. Pivot Point Supertrend. Created by Lonesome the Blue, this PineScript indicator enhances the traditional Supertrend by incorporating pivot point analysis for dynamic centerline calculation. Instead of relying on simple price averages, it determines trend direction using pivot highs and lows, combined with ATR-based volatility bands. Pivot points are detected using a configurable period, and the centerline is calculated by weighting recent pivot values with historical data. This creates a more responsive, price-sensitive centerline that better reflects significant market levels and reduces false signals during consolidation. Upper and lower bands are plotted around the center line. Trend direction follows Supertrend logic. Price closing above the lower band signals an uptrend. Closing below the upper band indicates a downtrend. A built-in trailing stop adjusts dynamically with market volatility. Buy and sell signals are shown with labeled shapes when trend direction changes, offering clear entry and exit cues. The indicator is highly customizable, with inputs for pivot periods, ATR settings, visual components, and alert triggers. Strategically, it supports trend following with reduced whipsaw risk, swing trading near pivot-based support resistance, and breakout confirmation when price moves decisively from the center line. Created by Zierman, this PineScript indicator identifies trend direction and potential reversal points using Fibonacci retracement principles combined with structure analysis. The system dynamically calculates a Fibonacci trend line based on significant highs and lows, adapting as price action evolves across the chart. The indicator monitors price movement relative to key Fibonacci levels, with the default set at 0.382. When price breaks above or below the calculated retracement level, the trend direction changes, generating a new reference line. This adaptive approach creates a trend-following system that accommodates market volatility while filtering minor price fluctuations. Structure identification adds another dimension by marking significant swing highs and lows based on a user-defined look-back period. These structure points connect to form support and resistance lines, visualizing the underlying market framework. The optional Fibonacci channel expands on this concept by creating dynamic support and resistance zones around the main trend line using average true range calculations to determine appropriate channel width. The visual elements include color-coded price bars based on trend direction, structure labels at reversal points, and a comprehensive set of Fibonacci levels that provide potential targets and entry zones. An information panel displays the current trend status, price level, and trend start date for quick reference. Traders can use this indicator for trend following, identifying potential reversal zones, or as a dynamic support resistance framework. The system works particularly well for swing trading, where Fibonacci relationships frequently influence price behavior. By adjusting the Fibonacci level and structure sensitivity, traders can calibrate the system to match their preferred time frame and market conditions. Oscillator Volume Profile. Created by Trendoscope, this indicator combines traditional oscillators with volume profile analysis to reveal where trading activity concentrates at specific oscillator values. Rather than examining price-based volume distribution, it maps volume intensity across oscillator readings, creating a unique perspective on market sentiment and momentum clustering. The indicator supports 9 different oscillators, including RSI, CMO, COG, MFI, ROC, CCI, Stochastic, TSI, and Williams %R, allowing traders to analyze volume distribution patterns across various momentum measurements. It calculates volume-weighted data points at each oscillator level, then constructs a horizontal profile showing where the most significant trading activity occurs within the oscillator's range. The visualization extends rightward from the current price action, displaying volume concentrations as horizontal bars of varying lengths. Longer bars indicate higher volume activity at those oscillator levels, revealing where market participants are most active during specific momentum conditions. This creates a heat map effect, showing oscillator levels with the strongest conviction. Traders can identify oscillator levels where volume clustering suggests strong support or resistance for momentum itself. When an oscillator approaches these high-volume zones, it may indicate areas where momentum could stall, reverse, or accelerate based on historical volume patterns. The trend filter option allows focusing on uptrend or downtrend periods exclusively. The indicator offers extensive customization, including oscillator type selection, length parameters for different oscillator calculations, range calculation methods, volume profile length limits, drawing size adjustments, and trend filtering options. Users can fine-tune precision levels and sticky border settings for more refined analysis.